Today on Ag Marketing IQ In Depth, we're welcoming Naomi Blohm. Naomi is regularly featured on our Ag Marketing IQ blogs and well regarded by this audience. So welcome to the audience today. And Naomi, thank you for taking some time to chat with us.
Yes, Pam, I'm excited to do this with you. Always great to visit with you. So I'm ready to go.
Same here. We've got a lot going on in the markets. One of the blogs recently mentioned that we were kind of at a, quiet time coming into harvest. But on the other hand, with so much going on with geopolitics and everybody looking toward those August 12th WSDA and crop production reports, what are you thinking in the overall?
Yeah, this corn market just continues to shuffle in a sideways pattern. What it's balancing is the potential for a large crop. So on the production side of things, we have the USDA report coming up on August 12th. Right now, the USDA thinks that the corn yield is right around 181, but traders out there think it might be closer to 184 or 185. However, there's pollination issues in some portions of the country.
Right.
So that puts a lot of uncertainty out there in terms of yield and where the production is going to be. We're also going to be watching to see where the USDA puts the yield in August, because it's just farmer survey and satellite imagery. So looking at the last 10 years, 6 out of 10 years, they increase the yield. And when they increase the yield on this August report, the average number that the increased yield is about 3 to 4 bushels per acre. So that's a big jump. Now, of course, there's years where they decrease yield, but I think overall with the satellite imagery probably looking good, we're maybe looking to see a production increase on the yield side. So that could be negative for prices. But to circle back to some of your initial question, geopolitics still a big thing. President Trump put a 90-day pause with Mexico and tariffs. So that would be good news for the standpoint that our exports to Mexico for corn should still be solid. We have an awesome demand story for corn right now between domestic demand and export demand. But at the end of the day, the question is, how big is the crop going to be? Where is that going to put corn carry out? If it ends up being closer to the current USDA number of 1.67, that's actually friendly. But if we come in with a yield of 184 or 185, then we've got carry out closer to 2 billion bushels, and that's not friendly. So that's why the corn market is stuck in limbo. So that, in a nutshell, is what we're dealing with.
And, when you say that 6 out of 10 years it's gone up, it has felt like this year has been like more like over the top, because we were already looking at USDA saying 181. So for some reason, that makes me feel a little better. Like, okay, this is kind of normal.
Yeah. Or maybe already priced into the market that we're expecting a yield increase. And so if that's the case, then maybe the market it's already priced it in. Maybe it's already immune to that. From a seasonal perspective, a lot of times we'll find our harvest low actually at the end of August. So I think traders are watching that too, and keeping an eye on the fund activity. Funds are close to short approximately 175, 180,000 bushels of corn right now. So there would be room for them to continue to be sellers if the news is negative. However, if we start to hear yield estimates closer to 181, that might be a reason why the funds start to exit some of those short positions and just kind of chill out for a little bit until we get to know a little bit more for sure what this crop size is.
So looking at the corn, we're seeing, decent demand still. Do you see that changing? Our exports still look great. I mean, they're above, what was expected. Everyone thought that would go away with the tariffs.
Yeah, corn export, without a doubt, phenomenal. We, of course, will have some competition as that Brazilian corn harvest is underway. Now, it's a little bit slower to get to market, but here's my fear, though, is that the world knows that Americans are going to have a pretty big crop, and they know that we're capable of storing corn here at home in farmer bins. We're capable of delivering it on time. So I'm wondering if we start to go back into that just-in-time freight mentality, where the world will say, well, we know the Americans have a good enough crop. We know they're going to take care of it. yeah, we'll be buying it, but we'll be buying it as we need it and let the American farmer store it. So that might be something that gives our harvest and our harvest low more of what we call a longer tail, meaning that more of a sideways price could ensue as we see the harvest low occur. Not like last year, where last year we had the harvest low occur at the end of August, and then it was a slow grind higher all the way through January. So I'm very curious to see how the traders and the trader reaction will be. We're just waiting to know where that yield is. That's the missing piece of the puzzle for corn right now.
And I'm wondering, that could make it kind of tough. We're looking at, if we do look at having some phenomenal yields, a lot of farmers can't store their whole crop on farm. So maybe we don't have those storage opportunities. I mean, last year there were some farmers who bagged their corn, and as I understand it, they came out pretty good on that. Although crunching those numbers, you wouldn't expect it to happen. But some farmers were able to, pull a little extra price opportunity out of doing that.
Right. And that could be something where with a big crop and with bigger storage and more crop coming to town at harvest time, we could see basis prices stay wide at harvest or wider than longer. And so farmers then have to maintain and watch basis levels from then, well, let's say October through winter and into the springtime to try to manage basis and capture better basis opportunities. If the crop ends up being larger, that's when we also talk about capturing the carry in the market. I did a blog writing about selling call options as a way to help pay for cost of storage. So take a look at that. It's on the website. So there's a few things to be mindful of. The other fear that, of course, that I have would be, what if this is where we're going to be going back to prices like we saw 2015 until 2019, and corn prices just kind of stay stuck in a rut. So it all will come down to where our U.S. yield is in the short term. Once we get that answered, then we can start looking ahead to what South America is going to be growing and how their weather is for their growing season, December, January, February.
Yeah. And that's, we talk about using and storing and basis and all of that. One of the, unknowns that's been talked about quite a bit, that's a positive, is that Brazil may be domestically using a whole lot more of its corn than it has been using. So are they going to put that much more out on the market, even if they have a big crop like what's expected from us?
Yeah, that's a great point, and I'm glad you brought that up. They are starting to increase their domestic demand for ethanol. And so they are, finding the value with that. And then that could be something where maybe some of their exports become less because more corn is going to their domestic needs. So that's something to be watching in the future. We don't have any short-term answer on that. I think that right now the market is a little bit more focused on, with that crop that they're harvesting, that safrinha crop, that is what fills the global void in the latter part of August and September, when our U.S. corn crop isn't quite ready to be harvested and sent out to the world. So the trader focus right now is that Brazil has a decent sized crop. It's getting harvested. It's slower to get exported, but it's available. And because it's available, that negative perception of supplies or surplus is what's just kind of keeping that corn price on the defensive for the short term.
Absolutely. So looking at export, looking at global demand, let's shift over to soybeans. What do you see in there in the overall, just kind of the headlines here?
Yeah, so looking at that bean market, November beans falling below $10 support was something that the market is keeping an eye on, because with soybean right now, the weather in the United States, the outlook for August weather is pretty darn good for pod filling and for getting us a decent sized crop. I don't think the USDA does a lot of tweaking on the August report for yield. Usually they wait till September because it's, with beans, you just never know what you got till you're harvesting them. So I don't really expect any changes on the production side of things. But what we're going to want to watch is if the USDA will actually make any adjustments to export demand. So right now they're looking at a number of like 1.6 or 1.7. I'd have to double check the specific amount. But traders are starting to wonder, is that number too high? Because we haven't seen China show up yet to purchase anything. So, the question will be, does the USDA acknowledge the lack of China's presence on the August WASDE report or not? Or will they say, you know what, everything's going to be fine and China's going to show up and demand is going to be there? And so that's going to be what we're balancing right now. It's a huge component of our exports. Half of what we export goes to China. And so if that biggest customer isn't there, that's an issue. And then that creates an uncertainty regarding where global carryout, where U.S. carryout is going to be, just based on, of course, those two components. So we're waiting on weather in the United States for soybeans, and the biggest component, Chinese demand of the U.S. product. So beans are a big question mark. I could see them having a reason why prices could drop 50 cents lower yet, or if China shows up, if we get some yield surprises that are lower, beans have every reason in the world why they could all of a sudden shoot $1 higher. So we're at that turning point right now with the market.
Feels like a giant game of chicken, and we're just trying not to get spurred.
Exactly right. Yes.
Well, we greatly appreciate your time today, Naomi. I hope everyone continues to follow your blog on farmfutures.com. And we look forward to that dollar coming forward for us instead of the ride lower. Maybe China needs us more than they're willing to admit right now.
Yep, for sure. Well, thanks so much for having me.
Thank you.